So making mistakes in trading is something that you shouldn't be too worried about because it can happen to anyone and it can happen to even myself. But when you are wrong with your trades or analysis, you want to make sure that you have some sort of underlining that could pretty much get you back to speed and help you find the best trade. So in today's situation, I'm going to explain the crucial mistake I made and how I managed to rebound from that, and then we will talk about a little bit of a prediction on where we believe the market can go moving forward, so that way you guys have an idea about the overall market sentiment as we go along. So first thing we want to talk about is the trades that we gave in the room today. Okay, so the first trade that we identified is that, first of all, SPX was down pretty much near the open. We've seen SPX hovering around 5620 and then 5600 level here. We started off the room by giving our prediction as always, and we pretty much shared that if SPX breaks this 5600, we could see a massive crater down there, but we gave the edge to the upside, which was indeed incorrect. All our levels broke, all the gamma levels broke. So this sell-off that we've seen today is there's something to it. It's very rare that my gamma levels will all break just like that, okay? But it does happen, and that could happen to anyone. I analyze the gamma levels, and the market just sliced through the entirety like butter. So we didn't see the strong market at all. There was literally no buyers today. The market just continued to dump nonstop, and every dip had no buyers. Okay, so that's very uncommon to see, but when it happens, you know exactly what the overall situation is. We share the news, and the news had positive sentiment on Tesla. BA was weak, Intel was down, and we spoke about the ISM numbers as well. Now going into the trades here, two trades we messed up on. Well, the Tesla one wasn't a mess up, but still we got in at the wrong time. We got the Tesla 225 calls for next week. It was moving really well compared to the overall market, but the wrong thing I did here is the AI oversized on a weak market, which is not so good, but the Tesla news was good, so we liked it for next week. That was the first thing. The second thing is we bought SPX calls at around 2.5. I shared this in the morning call saying that was a massive support, and the market just continued to sell off. Okay, but what I later realized is that after giving my levels, you know, the biggest mistake that we did is that we waited for this level 1 bearish 55.87 to come, and that's where we decided to get our calls. So we got our calls literally around here, around here, and you know, we got a little bit of a pop, but then pretty much the market just gave it all back, and from that point on, we decided to see weakness. Now, a couple of things here that I made a crucial mistake on is what's going to happen around level 1 bearish. Now, level 1 bearish pretty much is a gatekeeping level, and usually when it happens at open, there's a huge reversal. But the mistake that we made here today was that it's important that if you think that the market's going to break lower at this specific critical point, you have to really see how the overall heat map is. Okay, the mistake that I made is that I did notice that banks were weak and techs were weak because Nvidia opened way lower right off the bat here, but the banks were weak too. So when you're in this situation where you see the techs and the banks weak, you know, pretty much when you come to that level one bearish inflection point, you know that the market can go lower. So we had a little bit of a bullish bias into that day here. Okay, now besides that, we decided to take a coin put lotto, sorry, not really lotto, but a coin put, and those paid nice. We got a nice 70% right off the bat here. They actually ended up going slightly higher than 4, and we also got DELL puts, right? So I forgot to put it here, but I mentioned it in the chat. We got the DELL puts right over here. As you can see, bought DELL 110 put at 1.69, and they did very well. Okay, they actually managed to get around 60%, but I decided to swing because we noticed that the market was going to get weaker. And besides that, we also call out these meta puts, which in literally 10 minutes they went up to 70%. I'm still holding them because I see weakness in the market. So overall, we made we also stopped on our Tesla calls, only because we want to reevaluate this here, but we only lost 50%. Overall, we still have a chance of recovering here, and we're not down so much, okay? Because the plays that we gave were pretty nice. For small accounts in the free room, we gave the calls. They didn't work, but I gave us some nice put plays here on SPY, which more than doubled for the members here. Gave a decent entry point, and we also gave QQQ 450 puts for tomorrow. They literally doubled in a matter of minutes here, okay? So that was a nice play as well. So transitioning from, you know, seeing the bias from the upside to the downside was key. And even though all my levels broke, the thing that really helped me establish was that when level 2 bearish hit here, which confirms the trend, you can see this 55.60 held for kind of multiple times. It hit this point, bounced off. There was no WAP retest here whatsoever. The market still continued to move lower as it went, but this level here is where all my bearish buys gets eliminated, because once this inflection point hits, I know exactly that the downside is trending, and that's where you want to focus majority of your plays regardless of what it was. And the thing about buying puts in this market is that the premiums are so expensive. At any point, if you see SPX or any plays start to see a little bit of a pop, you will lose majority of your gains, and the premiums are so expensive to the point that it's gonna be a struggle just to get like 20-30% gain on your thing, even though you see a massive dump, because that's what happens when the premiums get super expensive. It doesn't end up working out. So what we waited for is that we got DELL because we want to see a WAP test here. So once it got to the WAP test, we got in DELL, and you can see that right over here around 12:32 is when we decided to get DELL, and that is around right over here. So right around here, we saw that a perfect opportunity. The premiums was not at the high of the day price, and we got in there, and then pretty much it flushed down. It gave around 40 points, 40% from this point on, which was nice. Some people took their profits. I wanted to play it. It went back up, and pretty much, you know, it closed in the red here again, okay? Meta was another trade which we discussed here, because I believe that this play wasn't down much, right? So we got around here at that point, and then as soon as it flushed all the way down to this point here, members got over 70% fast on the 500 puts, and they weren't even at the high of the day as well. So that was definitely a great play as well. Now overall, you can see here on my SPX, all my gamma levels easily broke. Once that 5600 level broke down, there was a huge bearish breakdown right over there. The 200-day moving average even broke down, and it looks like we might see a death cross set up here on SPX, which means downside trend confirmed. Now, if you guys can see right over here, this was a major gap. Every time SPX goes over here, like you can see here, it popped through here, massive run up at that point, and then massive tank over here. So this is based on previous history, and this is why the premiums get so expensive overall. So it's possible that SPX can open minus 50 points into tomorrow's open. The premiums are so expensive, and you can see that it's pricing it in. So we have huge downside potential. Now, to add fuel to the fire here, Nvidia came out with news. So Nvidia struggled to break through my 110 estimated weekly low, and pretty much once it broke, it started to really break down in my bearish breakdown mode. It's now currently at 105 at this point over here, and it looks like it might hit my extreme bearish breakdown mode here. And you know, pretty much the reason why Nvidia's suffering now is news broke out that the DOJ antitrust violation subpoena is kicking in. To be honest, these antitrust issues, they're not really a big deal, because most of the big techs go through this. They have a monopoly, we all know that. Nvidia, in their case, they have the best technology in their data center base, and that's why they're doing very extremely well, and that's why competitors like AMD are nowhere to be found when it comes to the AI data center race. So that's the big thing here. AMD also breaking down and likely to see 135 here. If it breaks down there, you probably see the next level there. Broadcom has earnings this week, so Thursday, watch out for that. LRCX looks like it's going to go to 755, so we're watching that as well. Tesla is trading in a chop range between 200 and 220. Still looks very weak. It looks like it's probably going to hit 200. That's why I decided to cut them, because 220 is going to be too far, even though it's 2 weeks out. So we decided to, forget it and then reevaluate it here. DELL, very possible that it can open at around 105. So we're still holding these puts because we see potential for that moving forward. Now, the reason why I got made up puts mainly is because we do know that the semiconductor space is very weak, and the big techs haven't been diving that much. So made up pretty much, I believe it might get under 500, and those puts look pretty good pre-market as well. They were selling banks today, so GS looks like it may break under this 485, but overall we also see an arm here as well that bounced off my inflection point, pretty much at this point over here, right on the money, bounced off this, went up here on my level 2 bearish, and as per my level 2 bearish confirmation, the trend is confirmed to the downside. Okay, so it hit it at this point over here. You can see that exactly to the T here, and that's pretty much where it goes. And for everyone that's wondering, pretty much I give these predictions, these levels, before the market even starts, before the beginning of the week, and you can see here that all my levels are to the perfection here. Some of them just continue to break, especially on the market and the overall sentiment, but there's a big issue with the market here, and because the market broke through all those gammas like that, we in a crash like situation. It's very rare for me to see that when my model numbers break, my estimated weekly lows break. That tells me there's a huge underlying issue this week, and there's massive selling that's going to be happening. So I predict that the S&P 500 is possibly going to open under 5,500, and it's possible to see 5480, 5450. And this is leading into the jobs report, which is coming out tomorrow. We also got the Bank of Canada announcing their rate details as well, so that's going to be a key thing. And if things don't go too good, we're going to see a major crash here. Okay, so tomorrow is Wednesday. You guys can see that over here. Tomorrow is Wednesday, and then you got the Bank of Japan with their, sorry, not the Bank of Japan, you got a 30-year bond auction in Japan. Any news that has to do with Japan, you just want to be aware of that, because the carry trade problem once again can be a big problem. And then on Thursday is when the job reports are kicking in, so just be aware of that. The JOLTS job openings at 10 a.m. So if you guys are swinging any puts, you at least got some time to sell them before that report comes out, and that'll give you a good opportunity as well. Besides that, there's not much else, but we definitely give the edge to the downside. And you got the beige book here as well. This beige book, even though it shows here it's not a meaningful event, it is important to know, because it's this beige book is used to help the FOMC make their next decision on interest rates. However, it tends to produce a mild impact, as FOMC also receives 2 non-public books. So this basically outlines their policy, and we may see that pivot as well, as since Powell pretty much pivoted, and the market is concerned about that because that hints a future recession. So that's all I got for you guys right now. Let's see if SPX opens down between 30 to 50 points. If so, crash has been initiated, and we're likely to see more downside until 5,400 SPX happens. Be aware on Thursday after close, Broadcom earnings, and that's going to be the biggest catalyst for this week. ZS reported their earnings, and they're also down, so just be aware of that. It's down around 13%. Yep, so it's down around 30%. Doesn't look so good, but we'll keep an eye on that. So I'll see you guys in the next one, and like always, let's get that money.